When it comes to China, what's top of mind this week?
I think it's, I think the trade talks are very, very important in the very near term, because I think obviously these Chinese are seen to have been disappointing in terms of the scale of their purchases of U.S. products. It's good that the two sides are talking. I think that's what the markets would take as a positive. And when we look at Chinese asset markets at the moment, any positive could be very helpful.
Yeah, and this is coming at a time, as I mentioned before, that people are turning a little bit less, I guess, risk averse when it comes to China markets. What needs to happen for this kind of trade to play out?
I think if we just came out without any contentious issues and the two sides have talked, they continue to try and build on progress that's been made in a current administration under Biden, that would be very helpful. And I think given that the asset markets in China are so beaten up over recent months, there's a lot of people tempted to buy on any, even kind of a neutral news out of these discussions.
What about the data? Are you seeing or are you expecting any kind of signs of turnaround in the fourth quarter? If not, what is that going to mean for markets here moving forward?
I think for the market, if we just had data that came in line with expectations, that would be a result, considering the backdrop of the recent, I would say, 6 to 8 weeks. So if the data comes in line with expectations, it just takes one of those issues away. But the worry could be that retail sales in particular would disappoint the downside. And also activity in the property market is very difficult to gauge, so there could be a miss there as well. But as I say, if they come in somewhere close to current expectations, that will be seen as a positive.
I want to kind of talk a bit more about the volatility we've seen in the bond markets of late as well. Just looking at where rates are, I mean, I'm still seeing a sub 160 for the U.S. 10-year. Does that make sense to you, Gary, given just the inflation concerns that we're seeing? And at what point do you think that's actually going to derail the equity rallies we've seen?
Yeah, I think it's quite honestly, I think it's crazy. But, the market is continuing to believe in the Fed's advice. This is transitory. We're going to see more noise, I think, this week out of the Fed speeches saying, please gauge this as transitory. But there was such a big miss last week on the inflation number. If they said it was transitory when inflation was coming in at 5, but this is a 6 handle on the CPI inflation number and possibly likely to go higher. So, yeah, the Fed's holding the market together at the moment. We may stick around the 150, 160 level, but I think we should be closer to 2.
You're looking at gold as a hedge. Why gold in particular? It really has struggled of late, maybe up to recently when you start to see it defending some of the gains against this kind of inflationary backdrop. But we've also seen things like value stocks, crypto, for example, actually show a little bit more of that deflationary kind of traits. Why gold then, Gary?
Yeah, gold never quite performs when people expect it to. They expect it to kick in earlier when we've got an inflation problem. But history tells us it takes a while for the market to absorb the news and to become a believer. I like to get in early. I don't mind suffering a bit of losses in the near term. But I think that the metal comfortably gets back to 2,000 within the next 3 to 6 months, given the direction and path of inflation at the moment.
Do you think that markets have fully digested just the inflationary pressure? I mean, everyone's saying that 6.2% last week from U.S. CPI was kind of the sticker shock that stunned the world. Do you think we fully kind of expressed that in markets now, this potential regime change?
I don't think we have. I think we just want to believe in what we've seen over the last 15 years, that inflation can only go down, and that the policymakers kind of always get it right. And I just feel that the policymakers are not up with the game. They're behind the curve in terms of controlling this inflation. For sure, there's some transitory issues inside those inflation numbers. But remember, if the Fed hits its target of, say, 2 to 2.5% inflation, that means interest rates have to be 2 percentage points higher than where they are today. And I think that's challenging for markets.
All right. In terms of markets, what are you most kind of, I guess, excited about these days, given the fact that you have these U.S. equity markets that go from strength to strength? Most people kind of starting to look a little bit more positive to China, but where else do you look at?
Yeah, I think if people are looking for better value, if they're going to be holding equities here, I think the U.S. is stretched, but it's been stretched for some time, and valuation doesn't tell you much about future performance. So I think people have got a positive view now of Japan, where you're seeing both fiscal support and probably consumer confidence coming back strongly after the relief from the COVID. You're seeing a lot more positive news about the UK, which I think has got a competitive exchange rate, and again, where COVID has been overcome, and we're seeing a good rebound. And in the smaller markets, we're still playing, I would say, commodity play in the case of Russia, and the Vietnam strong story with a big fiscal boost coming over the next year.